Alright, so this is going to be a quick little equity talk, market read going forward into the week of the 23rd, and kind of my ideology, right? So OPEX and VIX expiration for the month of February 2026 have passed, right? And what we kind of have developing here on SPY is, in my opinion, very reminiscent of this late January, early February internal accumulation that ended up in the UTAD. So we'd essentially already wiped the election gap dry. Well, not already solidified that absorption of demand, but we had been establishing our path of least resistance, and throughout this range, we had a very aggressive, not even aggressive, very weak rally that like aggressively pushed to new highs and then stalled. A lot of gaps, a lot of anomaly prints, a lot of like very lack of effort and volume. Even that, like, there's not a lot of volume on this. Like, it's like a 6% rally. Yeah, 6% rally. There's not a lot of volume backing this, and it's not a very clean structure with a very notable like gap fill, higher low, and then we rally and we kind of base above the highs, right? It's more a big time move in like a couple weeks with a lot of gaps left behind, right? And then those are filled on DeepSeek and then another subsequent news candle on a Monday, giving us kind of this internal accumulative sequence into a CPI report that gives you a higher low, and then a stall into the February OPEC or VIX expiration top, right? What we kind of have here is a distribution developing, a path of least resistance kind of being put in at this 654 range, and stalls at the highs that haven't really given us a clear short-sided trade yet, right? There's no clear like test of demand or lower high. What we have here though is one low on an NWOG, very capitulatory into a reversion to new highs, and then kind of this FOMC print, another low, right? Bidding this low, giving us a subsequent reversal, failing at these highs, and then we break down again, and we kind of get this pop and this kind of like internal higher low kind of developing in the anomaly print that we have from the Thursday, February 12th session, right? A 1.37% move in very minimal time. There's a lot of bar by bar imbalance within here. We're going to have a seller try to protect the progression that they made. But we have this, we have kind of like this three lower low internal accumulation, and it all leads into the NVDA report, post expiration, post OPEX, and into a vulnerable short side window, right, where we can see this demand wipe. We have a very similar thing on QQQ within a bull gap that's being filled and could potentially push into maybe not a true UTAD. That would be a little bit aggressive to take out these highs, although it's not unheard of. But even to take out these February 11th highs, right? We have a weekly chart that doesn't look very appealing. Like I said, you have very minimal progression made above the previous highs. The wickage is showing the volume on the 9th of February's candle, and like the failure to really get anywhere is very notable. But I would love to see a new high kind of shown into the NVIDIA report on SPX, and then a subsequent test to short this into the 6,700 range. And something kind of similar on QQQ, right? I think we can have this path of least resistance at the 655 to 652 range, and a path of least resistance at this 590 range, respectively, right? Just based off how these structures are developing and how these kind of weekly charts look, right? This is not a good weekly chart at all, right? But it's also not super vulnerable yet. And I do think that the NVIDIA report kind of sets it off. If we look at other data sets that we have going forward, when is the next FOMC? Oh, I'm not sure. CPI and PPI the week of March expiration, I think. Yeah. So it's all kind of, it's vulnerable, I think, right? And we see SMH giving us a really ugly look. This is not like a good candle, right? This is not like a hammer candle, or this is like a hammer candle, but it's more like a hanging man, kind of. Not exactly, but this is not a good chart, and I've talked about this a ton. This is not a good look, and I've talked about this a ton. 151 gap fill would be a little bit more ideal in terms of like a 3 higher high distribution within this bear gap. Like 1, 2, 3. Oh my god, that's fucked up. But this is not a good look, right? Not at all. And even the financial sector is giving us a little bit of a picture here with the 5% week last week. We had Schwab giving us a very ugly candle from the highs. The reversion of the mean is kind of inevitable, though, at least ideally. But the financial sector giving us a kind of gross look is very telling as well. I think that's something a lot of people don't understand. In terms of technology and financials are the largest holdings in the S&P 500. That's a very, very crystal clear kind of implication. You have energy running very similar to the Q2 run or Q1 and the Q2 run in 2024. This was just a big time moment in the energy sector and the subsequent absorption of supply and rally off of this news on the 5th of January that resulted in the subsequent higher low. Aggressively pushed this to new highs. I never really saw an opportunity that presented itself that I was super fond of, except for Oxy, a position from like low 40s, high 30s to low to mid 50s, and then a potential for a longer term positioning as well to target new highs in this overall accumulation. ZOM looked good, right? But I mean, there's obviously not really much of anything to say here besides Oxy USO with kind of this higher low and the progression gap. Very accumulative charts though overall, right? You look at like the CVX, like this was a good opportunity to bid some CVX commons on this very notable consolidation that we had for 3 years, 4 years, and then it's kind of like internal higher low that we had to push this into the April gap fills. Schlumberger, a very notable accumulation that aggressively rallied. MPC, kind of the same thing. ConocoPhillips, kind of the same thing. Phillips 66, VLO. Yeah, very notable charts that have opportunities on commons that I just never executed on. This was actually a pretty good look, but it's a very slow mover and more of like something I like to pay attention to in terms of the movement of the risk on and risk off equities, consumer staples is. I have a Moderna position still up about 18%. I still like this. This is 6 inside weeks inside of the January 5th candle, right, with a lot of volume coming on this February 2nd week, and some just internal consolidation developing here with kind of very clean patterns, and a couple of these names look pretty good. As far as like Mag 7 goes, I think Microsoft gives a reversion of the mean trade here. A very beaten down name from the highs, and drawing into this earnings gap, the reversion into this earnings gap is kind of inevitable. There is an objective risk at 395 here to target 440, right? About an 11% move. I'm not sure. I mean, 468 would kind of be ideal when you look at like the potential for this to be a distribution and this to be like your last point of support. But I don't know. It's just more of a commons trade for the moment, or an options trade to 411. I do think that this is very reminiscent of a sell-off, and then a bidder stepping in here and the subsequent selling exhaustion into the full earnings gap. And we can kind of see the tape begin to flip off this reversion, a reversal, right? I think this is just very, it's very simple why you would not want to be short Microsoft. And kind of the preliminary signs of an accumulation, not an accumulation, but of a bidder showing its hand here prior to the report with a notable amount of volume. Not really anything on Google. Amazon reversion of the mean is kind of very notable as well. AMD, we'll see how NVDA report looks. Apple falling to 7% week or 8% week. We do end up seeing a bidder here on Tuesday's session. I'm going to keep an eye out on this for potential short down to 250. We definitely look for this progression gap. Not a bad look as well, right? Tesla reversion, I would kind of like that. I don't have much of a read here except for the fact that I'd want it short up here for like a push to 360, but we'll have to see. And we have NVIDIA, right? I mean, I've talked about this a lot. This is, in my opinion, right, if we want to look at like a higher time frame perspective, I think this is all a distribution, right? I think that we rallied from $7 to $200 from 2022 to 2026. We have a daily distribution developing here. We have a rally, and we have another a redistribution developing here. And I think this is all going to push us down to the $50 range. Now that's speculative, right? But this was very clearly a distribution. We find the 40%, 50% sell-off into April. We find the reversal, and then a subsequent daily distribution above new highs, right? that's how these things work, right? There's a distribution, there's a seller showing his hands. We see an event that catalyzes a spark to new highs, and then we see a subsequent stall above said highs, right? It's not like campaigns can't fail or new campaigns can't begin. You have to just play the time frame at hand, right? If you're short NVIDIA here, looking for a move to 50, and we see a 50% reversal from 143, 152, like, when you don't cover anything and you go big red, like, it's stupid. You have to play the time frame, right? And the time frame here was short with opportunities throughout here to play both sides. And the time frame here is short as well, right? We see the preliminary support or supply. We see the climax of the report, the reaction, the floor being established at 170. The UT, the big breakdown and an attempted high or low that results in a very parabolic short kind of high, all-time high failure. The sell-off, the earnings candle footprint, another kind of attempt to market up off this floor that gets you nowhere. We see a rally, we see a higher low discount leading into the report Wednesday after hours. Give me an IV flush to 199, and I'm taking NVD or NVDS for a 15% move minimum. And if the behavior there is very weak, I think you can take this all the way to 160, right? And I think that's a 17% move, and I think that could happen in a couple weeks before March flows. I don't think that's very far-fetched. This is a very established campaign, and like I said, it's just very reminiscent of how this developed. You look at this from the highs in February to the lows in March, 27% move in just about a month, less than a month. This is a very weak chart, and I think this is going to set the market off, right? Nothing new ever happens, but everything is kind of different. You have to understand how to play this, in my opinion. Right? But I do think that this, I want to get a little speculative. I do think that this revisits $50. We'll see that. Meta, we attempt this gap fill from January. I think that we could push to 695. That is kind of our discounted lower high. That would set up a move to 613. That's something that I'll be paying attention to as well, right? Moderna, 20% or 18% weak. Absolutely beautiful, right? I would have liked a little bit more volume, but we had the earnings report in a big event last week. Yeah, you guys, I talked about this a ton, right? The preliminary support and the potential preliminary support on a name that was really beaten down heading into the year and heading into Q4 of last year, and heading into last year, right? We kind of see a climax, we see a reaction, we see very heavy volume pouring in down here. We see a test, we see a stall, we see a spring, and we see an internal test, last point support, a really clean sign of strength, and then subsequent 2-week consolidation into a fake out prior to the report that gives us a very aggressive move, right? This isn't the greatest look as far as like a day-to-day structure goes. I would have liked it a little bit cleaner, but you look at like the 4 hour, right? Like with extended hours, we had this big fake out, this change in character, pop, consolidation, and then subsequently that developing again. I'm taking this to 55. I think this could potentially push 62, but this is a very clean look that I've talked about a ton. And other than that, Ford looks really nice. A lot of inside weakage within this candle. And then the overall structure of this chart, I think this pushes 15 to 16 soon. UNH, seeing a little bit of reversion to the mean in this earnings gap. However, I'm not super confident that this is going to be our high or low. I think it's a little deep. I think that the third lower low in this range would be ideal for a push to 480, 430. But this kind of 4-day consolidation pattern inside of this print is ideal for like a Moderna pop if we can see healthcare rally into the gap on like a tech sell-off. Nike looks really nice. We had a news event. I guess it's just a commons trade. I've talked about that a ton. There's not really much else to say about that. Really nothing changes. I'm keeping my eye on these healthcare names. Or not these healthcare names, these software names. There's just an insane amount of volume here in insane spots. And I think that something can happen here. But we'll have to kind of see going forward what develops. I do think that these kind of give us some kind of reversion. I think Microsoft is going to be a name that I'm paying attention to. Adobe, CRM, and all of those. I do like Microsoft here. Yeah, other than that, there's just not much that's very telling for me, right? There's not much that's very telling for me besides Moderna, right? Now, I hate to say it, I'm up about 18%. I do have a break-even stop. I would cut that. I'm not going to sell this now. I'm not going to sell this till we break structure. I would cut that, and I would take ads again in case, like, well, I'll watch how this gap behaves. If we lose this gap, then I'll cover this, right? So about break even. But I like this chart a lot, personally. So I'm going to keep this position. I'm going to see how we open up to begin the week. But yeah, I mean, that's pretty much it, right? Just paying attention. We have a big time phantom print on what's it called? On TSM, right? It's something we have to pay attention to. And really, yeah, we have to really pay attention to that. Yeah, I got a stop loss at 43 on Moderna with a 42.60 average. And I have a take profit at 55. That's kind of what we're working with, right? Yeah. And honestly, if we do push 55, I probably will cover I have a handful of these. I'll probably cover a little bit more than and maybe see if we can get a push to 60. Depends, right? But that's pretty much it. I mean, there's not much else here, right? I think NVIDIA report sets it off. I think that's what's gonna start the decline on tech, equity, and as far as reversal or rotations go, healthcare looks good. Healthcare looks pretty good. And yeah, that's pretty much it for me, right?